So today we're going to look at the Redefine FY22 results. Starting with the executive summary, we saw some interesting points being the restructuring of Polska and the loan-to-value reduction strategy. So essentially management executed successfully on both of those. Then we update our intrinsic value to R5.40, which implies a 27% upside, and we maintain our buy recommendation and outlook. Then results were roughly in line with market consensus, but they did beat our in-house estimates. This was primarily due to the non-materialization of the risks surrounding the audit chair resignation, and we do place emphasis on management, and we're quite happy to see that hasn't materialized as yet. Then the successful restructuring of Polska and the implementation of the loan-to-value reduction. The loan-to-value reduction doesn't seem very big, but I think it's more directionally appropriate, and it does bring the debt levels within the target band. Then also it's important to note that the intrinsic value upside has to be considered with the high stress testing risk. Okay, looking at our results, we saw revenue increase 15.1% and funds from operations up 20% and beat our consensus. In terms of the loan to value, we saw a reduction from 42.4 to 40.2, which brings it in line with the target range. I think this was a very important part of the results, and this essentially indicated that the Polska acquisition didn't too heavily dilute or didn't too heavily impact the debt of the business, especially considering the fact that Polska at the time of the acquisition had a loan to value of about 55%, which is of course very, very high. Then, as part of the restructuring, Polska did not pay a dividend. This resulted in a dividend decrease of 29%. And we did hear from management that they didn't place a firm probability, but it does seem like management is quite positive on the probability of Polska paying a dividend in 2023. Certainly looking at where the turnaround and the restructuring is currently, that does look more and more likely. Then another interesting point that we saw was the reduction of the effective cost of debt from 6.2 to 6%, specifically in this current and rising interest rate environment. That was quite important to us. This was due to a few factors, primarily being the retirement of very expensive mezzanine debt. Then secondly, just I think the mechanics of the acquisition. Redefine owned about 45% of Polska, and then they boosted their stake up to 95%. This, of course, just resulted in a lower weighted average cost of debt due to the fact that a lot of that Polska debt was denominated in euros. Then also we saw a fairly healthy debt and interest rate hedge at 82%, and this is in the backdrop of more and more expensive hedging costs, which was also quite good for us to see. It means management is essentially quite effectively managing their interest rate exposure. All of these factors lead us to be a bit more bullish and is in line with our thesis, and therefore we maintain our positive outlook on the company.
Thank you very much for joining us today.